Hello and welcome everyone. My name is Peter Robinson and today I have Musa Badin, who is going to tell us about his PhD research. And do you want to introduce yourself as a starting point?
Thank you. My name is Musbaldin Oladejo. I'm from Nigeria. I just completed my PhD at the University of Waikato, New Zealand. I'm privileged to have studied in 4 continents: Africa, Asia, Europe, and now Pacific. Thank you for inviting me to share part of my research work with this erudite group, and I'm open to your comments, feedback, and contributions. Thank you.
And glad to have you on, glad to have you here today. So look, please share your slides. Actually, before you share your slides, are you happy for people to ask questions when they like, or should people wait to the end? How do you want to do questions?
Maybe we should wait to the end.
Yeah, that's okay. That's good. All right. So please share your slides. And so people, if you're worried about remembering your question for the end, maybe put it in the chat. And that way we'll be able to go through the questions at the end if you forget them. Yeah, so please, over to you.
Thank you. Can you see my screen now, please?
Yes, we can.
Okay. Good afternoon from NZ. As I said earlier, my name is Musbaldin. I will just take through part of my research, which investigate blockchain technology, whether it's going to be a disruptor or an answer to the accounting and auditing profession. And this work is carried out under the supervisions of Associate Professor Mary Lowe, Dr. Fida Botis, and Professor Steve Reeves. All are from University of Waikato. My talk this afternoon the outlines covers a brief introductions of what the blockchain is like, the background of the research objective and the approach that we adopted, some of the findings, the challenges that we face undertaking this research, and the little contribution we have made. Then I will round up by also show the future talks that we are expecting on this platform. Let me start with the introduction. There are a lot of general statements about what the blockchain is going to do to a lot of profession. Generally, a lot of people believe that with the advent of blockchain, there are not going to be middlemen any longer because the technology is capable of doing virtually everything. Some writers believe that blockchain auditing, it will enable us to have automated audits. Therefore, we are unlikely going to have the role of auditor is going to be curtailed. Task Force and Task Force believe that some management function will go away if blockchain is actually adopted. And some of these functions include banking, lawyer, accountant roles, and what have you. Professor Yemak strongly believed that if blockchain is adopted, stakeholders can prepare financial statements independently without recourse to accountants, because each person will have a copy of the ledgers. And the Institute of Chartered Accountants in England and Wales believe that blockchain will automate accounts and ledgers. CPS Canada also share the same view. They believe that the total record keeping will be automated, starting from the initiation of the transactions to the payment ends. Looking at some of these statements and general assertions about what the blockchain will do, inform our decision to actually look at whether blockchain will enhance or disrupt the accounting and auditing profession. Going to the researcher background, as we speak, there is no universally accepted definition of what the blockchain technology is all about. However, international standard for organization is working on accepted definitions. Many writers have coined the definition of blockchain around its unique features, which is, they've described it as a shared distributed ledger, which is decentralized, and the communications on blockchain network is on peer-to-peer basis. And whatever decision taken on blockchain is carried out by majority of the users. And the records on blockchain are immutable, they are transparent, they are irreversible, and it can be easily audited. And once the transaction is timestamped, it cannot be reversed. And the main things behind the blockchain itself is the cryptographic security that makes these ledgers or transactions on need to be irreversible. Because of some of these unique features, a lot of writers believe that the technology will impact accounting and auditing profession. And then which aspects of this accounting and auditing profession that the technology will impact? Some people believe that the technology will revolutionize the entire accounting profession, and it will lead to reduction in the cost of preparing, reconciling, and provision of assurance work by some of the auditing firms. Some believe because of the same unique features, it's going to enable us to have equal access to the financial ledgers, because based on the unique features of the technology, each participant is supposed to have a copy of the ledgers. And because the decision that will be taken on the blockchain will be based on consensus, it will be difficult for anybody to actually duplicate or carry out any fraudulent transactions. Some believe that with the blockchain, then the financial statement will be more reliable, and the technology is capable of facilitating triple entry accounting system. It is also believed that the technology will guarantee tax payments and eliminate tax fraud. These are some of the key accounting roles. And with the technology, the audit will be automated, and we may not likely require the services of auditors again. Professor Yemak was emphatic when he said it will reduce the role of auditing firms or eliminate the roles of accountants. Then what are the existing research gaps that we found from the literature that we reviewed so far? Some scholars developed some blockchain accounting models, which they believe that if put into use, it will reduce the role of accountant and auditor. But some of these models, they require empirical validations because they are still what I can refer to as lab-based model. In 2021, Lombardi et al. Believed that one of the gaps that we face in researching into the implications of blockchain technology as it will affect accounting is that there are no engagements with the practitioners of the accounting profession or outside the accounting profession itself. And also there is a paucity of knowledge about the practical implications of what the BCT or the blockchain technology can do itself. So our study is qualitative study, and we engage practitioners beyond the accounting firms, we ensure that blockchain startups and IT experts were among the people that we engage so as to fill the identified research gap, which is the lack of engagement with the practitioners. So this leads me to the main objective of my study, which was to critically examine whether blockchain technology will enhance or disrupt the accounting and auditing profession. Out of this central objective, these are some of sub-objectives that we examined. We look at it that what actually will be the accounting practices that will change in a blockchain-based environment. What areas will the technology actually enhance or disrupt? If the unique features of the blockchain comes into play, are auditors still going to be relevant or not in the financial system? And we also try to find out from the participants, are they aware of any organization that are currently using blockchain for financial accounting and reporting purposes? Having briefly talked about some of the objectives and what we actually look at, let me take a quick look at the research methodology and method. The methodology we adopted, research is qualitative exploratory research, and we rely on a constructivist and interpretivist approach. This approach enables us to co-construct the multiple meanings and interpretations by different participants. In the later slide, I will share more information about the participants themselves. So why choosing qualitative study? The research is qualitative because it enables us to interact with the practitioners who have hands-on experience on the usage of blockchain itself. So going to the method and the design. Access to data. Initially, it is difficult to access data because of the commercial sensitivity of blockchain technology itself. But we were able to contact 198 participants, and out of these 198, we secure 44 participants who eventually participated. And the sampling method we adopted has to be purposeful sampling. Why purposeful sampling? Because we need to pre-qualify the participants. It's not just anyhow person who we want to participate in this research. The criteria are you must have basic understanding of how blockchain works, or your organization is having one or two experiments about what the blockchain is all about. And from the engagement with some of these participants, which leads to snowballing techniques, some of them subsequently refer us to their contacts who have the knowledge of blockchain technology or not. The data collections, we use semi-structured interview. Why semi-structured interview? Because it enables people to speak freely, to express their ideas, what they know about the phenomenon that we are researching into, which is the blockchain technology. The data were analyzed with the aid of in vivo qualitative software because the data is really voluminous, talking to 44 participants across the globe. And the findings, thematic data analysis were used for the finding. Let me give us a brief background about the profiles of the participants. Excuse me. As I said earlier, we contacted 198 participants across the globe. Out of these 198 participants, we are only able to secure the consent of 44 participants who met the criteria set out and are willing to participate in the research. Out of these 44 participants, we got 44 people direct. And using the snowballing technique, we were able to get 27 people, that is 27 referrals. So these 44 participants cut across 13 countries and 5 continents. Top on the list is United States of America. We have 14 participants from there, followed by Aotearoa, New Zealand, with 12 participants. United Kingdom, Australia, and the rest of the country, Canada, Ireland, India, Germany, Italy, South Africa, Hong Kong, and United Arab Emirates. We have 1 participant each. Then these 44 participants were further grouped into 6 categories so as to be able to situate their thoughts. So the first category are participants from blockchain startup and IT experts. These are the people that actually have hands-on experience on how blockchain technology itself works. Then the second categories are professional accounting bodies. Here we have Chartered Accountant Australia and New Zealand, CPA Australia, Institute of Chartered Accountants in England and Wales, South African Institute of Chartered Accountants, ACCA Global, and American Institute of Certified Public Accountants. These are the professional accounting bodies that we talk to. Then the participants we group under audit and assurance firms. These are the people that work in the Big Four because they are the ones that are experimenting a lot with the blockchain technology itself. Some of them are audit partners, some of them are directors, some of them are associates, and some of them are in charge of the ITs in audit and assurance firms. People we place under accountant and auditors group. Some of them have previously worked with the Big Four, but some of them are currently head of finance, directors, working in banks, but they're accountants. Under financial analysts and other experts, we have senior editors from journals, we have experts from supply chain management, and last but not the least are the academics. We have professors there, associate professors, and senior lecturers. So, having taken us through the research methodology and method and the profile of participants, I will now dovetail into some of the research findings, starting from the most highlighted areas that participants believe that the blockchain will have effects on the accounting practices. Using the NVivo, we have a word cloud. Majority of the areas that come up using the NVivo states that it will be a reconciliation of the accounts, the normal bookkeeping, maybe checking, and inventory. These are some of the areas that the participants believe that the technology will have impact on the current accounting practices. So much detailed talks goes into the roots of the accounting system itself, which is the double entry accounting system. We're all aware that this is the foundation of accounting. It's either you debit it or you credit it. So from the participant point of view, there are diverse opinions as to whether the blockchain technology will disrupt double entry accounting system or not. There are 3 emerging themes among the participants. The first group believe that the technology will disrupt the double entry accounting system. The second group believe that it will only enhance the double entry accounting system. And the third group believed that no, the technology will add no value to the existing double entry accounting system. I will go through each of them one by one and see their supporting view too, starting from the group that believe that the technology will disrupt the double entry accounting system. They strongly believe that because of the unique features of the blockchain technology, it will enable one ledger and one account. And if we have one ledger and one account, what is the essence of having a double entry system? That with the blockchain technology, the double entry system will be eliminated. They also strongly believe that the technology will facilitate accurate accounting ledger, and it will bring about trust among the stakeholders. And the reason is simple. If all of us have a copy of ledger, why am I going to be worried? Why do I need to rely on the job of accountant if I actually have a copy of the ledger? So taking a sample of, taking one of these statements as representative sample, they believe that the technology will be more accurate and better. We don't need that. Having a credit and debit entry does not say the double entry system is correct. But if anything is actually in a blockchain system, it will be correct and accurate. That is the group that believe that the technology will disrupt the double entry system. Going to the second group that just simply believe that no, the technology will only enhance the double entry system, or at best, just evolve the triple entry accounting system. And the triple entry accounting system, there have been a lot of write-up on it too. But what is common among the writer is that the existing double entry system will still be there. There'll be debit, there'll be credit, and there'll be that third leg that will be in the blockchain itself, which will be permanent and immutable. So the representative sample believe that there has to be a distribution, and when there is an entry, there will definitely be two legs. That means we still have debit and credit, and then the blockchain will hold the third entry. So that is the only aspect that the blockchain will bring on board to the existing double entry system. It's not going to disrupt it. The last theme is about the naysayers. They believe that the blockchain technology will add no value to the existing double entry system or change the existing configurations. And this group believe that, one, historically, blockchain, the double entry system has been there for more than 1,000 years. And what is new that the blockchain technology is going to bring, and the technology itself does not really fit into the accounting transaction system. So taking two examples, the last one say, I don't know the blockchain has a much to answer the double entry bookkeeping. I think it has a possibility for helping to verify and to work on some of the aspects of record keeping. But I don't think it changes the fundamental nature of how we measure business, which is via this very well-evolved system. And the system they are referring to is the double entry system itself. These are our findings as regards to whether the area that the double entry system, whether the blockchain technology will disrupt or enhance the double entry system. So this leads me to the second finding, which is about whether the auditors are still relevant in the blockchain environment. The majority of the participants believe that with or without blockchain, the role of auditors cannot be eliminated, that the auditor will still be relevant. However, we have some dissenting voice that believe that no, with blockchain technology, the role of auditor is no longer going to be there. But let me first of all take a look at the majority who believe that the role of auditor will still be there, irrespective of whether we adopt technology or not. So the majority believe that what they believe that the technology will help us to do is to reduce costs or address some of the major challenges we are facing in accounting. We will still require auditor to check whether the blockchain is actually churning out what is expected to do or not. For instance, one of the academics believe that I don't think there's a technology that ever exists that will replace the human 100%. Probably is going to eliminate certain activities, but it is also going to create different activities. So some of these activities that some of them believe that it's going to create is that if you are using blockchain now, the government want to know, the investor want to know, is this blockchain actually doing what is expected to do? Is 2 + 2 in blockchain is 4, or is going to be 5 at the end of the day? And in the accounting group, they believe that there are a lot of areas where the blockchain is not going to make a big difference. Auditing is one of them. So these are some of the views of the participants, that the blockchain technology will not eliminate the roles of auditor in the financial system. However, there are dissenting voices. There are minority who believe that no, look, we are holding a contrary view. This technology is capable of eliminating auditors. Taking example, said the role of auditor become less relevant if we actually adopt blockchain technology for reporting purposes. Because if blockchain is being implemented from the first place in a business organization, then automatically all transactions that, as I said earlier, we will all have a copy of these transactions. So what will now be the role of auditors? Do we still need them to perform any transactions? So they believe that. Hello? Hello?
Yeah, we can
I think
still.
that was a mistake. Don't worry.
Okay,
There's someone joining with.
All right. Thank you. So these are the contrary views. They believe that the roles of auditor will go away, whether we like it or not. But the majority believe that the role of auditor will still remain there. So at the end of the day, we now want to know, are there organizations that are actually using the blockchain for financial reporting and accounting transactions or not? To my surprise, majority of the participants believe that outside the cryptocurrencies, there are no organizations that have adopted blockchain technology for full financial reporting and accounting system. Though in New Zealand, I know Frontera is using blockchain technology to undo their shipping documentations. And when I probe them further, that do you interlink this segment of your documentation with your Oracle financial system? They say no. It is a standalone system blockchain we are currently using just to undo the documentation for the shipping. So the 44 participants we talk or we chat with over 44 countries, none of them have seen any organization that have adopted blockchain for financial reporting and accounting system before. And they're taking a sample of one of the participants from the accounting regulatory body. So we have heard from many of the CPA members that have started to adopt AI and machine learning tool, as well as data analytics, data visualization tools, and robotic process automation, cloud computing, and so on. But none of them has referred to blockchain technology. So, in our world, none of them has adopted blockchain technology or has come across a client that uses blockchain technology for full accounting and auditing purposes. This leads me to the challenges we encounter when we are carrying out this research. First, limited empirical studies with regards to the practical implication of blockchain technology on the accounting and auditing practices. Secondly, access to data is restricted because of the commercial sensitivity of the blockchain. Some of the participants are not ready to divulge the detail of what their clients are actually doing with the blockchain. So another thing that came to fore is what we refer to the Dunning-Kruger effect, where people exaggerate their knowledge or underrate their knowledge. And I put two examples up here. A professor said, this professor has written an article before that said the roles of auditors are not going to be useful, it's not going to be relevant. So when we are talking, he told me, he said, look, I do exaggerate a little bit for effect, but I do think that the blockchain is going to affect the accounting profession, but not as I projected it earlier. Also, one of the partners from the Big Four auditing, this person is from Australia, said the hypothesis that I have is that blockchain is a fantastic and really interesting technology that has proven itself to have no real world application of value. And I'm deliberately being controversial, direct, and waiting to be proven wrong on this. It was said to me probably 5 years ago. Actually, I made that comment on TV, but I'm not quite as blatant as I just did then. So these are some of the challenges we face because qualitative research has its own limitation too. It is possible that some people want to project the technology, and it is also possible that some people want to rubbish the technology. So with the guidance of the supervisors, we are able to moderate some of these because we cross-fertilize some of the ideas to debunk some of these claims and to come up with our findings. So having talked briefly about the challenges, I will briefly mention the little contributions we have made to the body of knowledge and practice. We are able to fill the research gaps by engaging with practitioners from different fields outside the accounting professions and from different geographical areas. And this has enhanced two major areas of literature, which is blockchain itself and the accounting. We've also been able to highlight the deviations between the initial expectations that blockchain is going to eliminate the roles of accountants or eliminate the role of the auditor. And by looking at the practical implication of what the technology can actually do, our finding contests the claim by Lombardi et al. That blockchain is already disrupting auditing profession. Our finding contests that blockchain is not disrupting auditing professions. We've also been able to provide insights for accountants, auditors, stakeholders who want to know what is the extent of adoption of blockchain technology for financial accounting and reporting purposes. So these are some of the modest contributions we have made with this research. At this point in time, I would like to thank you all first for giving me the opportunity to chat with you this afternoon. I will wait for your feedbacks, your questions and comments. Thank you. But before we progress to the questions and comments, these are some of the further readings and the future talks. Now, in 1st of March, we're going to be expecting formal verification of distributed validator. Then March 8th, another one comes up March 22. Another talk will come up April 5th. And finally, May 3rd for this year. So thank you. I will wait for your comments, questions, and contributions. Thank you.
Yeah, well, thank you for your great talk and talking about your research. So, I don't know, are there any questions that anyone else has? I know I've got a question or two, but
I have a few. If I could just ask one quick one.
for sure, go for it.
So would you say, if you included this, I apologize, I might have missed this particular detail, but in disrupting, obviously how you guys assess the disruption of the role of the auditor, as we understand it currently, the auditor who would go in and manually check these double entry accounting entries and make sure everything adds up and balances. Would the auditor not just transition to somebody who would audit the actual code of the blockchain? Like, I assume that before Coinbase and Bitstamp and Kraken and these big exchanges actually brought on some of these lesser known chains, like, I guess, or not lesser known, but, you know, less established chains like Polygon and Tron and stuff like that. They must have had somebody actually audit the chain to make sure that nothing malicious was in it. So, I mean, would the auditor not, basically your trust is in the actual code of the chain at this point, not a central financial entity. Did that question come up at all in your research?
It does. We actually specifically ask the participants, what actually will the what actually will auditor audit? Is it the chain or the transaction itself? And the participants believe that the auditor are expected to audit both the chain and the transaction itself. The auditor need to look at the codes. Is the code properly written? Is it doing what is expected to do? So it's not only just the code, including the transactions. Because the code may be doing something else, and if the auditor does not have the knowledge to audit the code, they believe that in audit team, there are system auditors there. There are IT experts who will carry out some of those activities for them.
Thank you.
Thank you.
Yeah.
Yeah.
Frank, I think you had your hand up as the next one. So do you want to ask your question next?
Yeah, thank you, Peter. Thank you for the talk. So yes, I have a question related to how you measure whether there's a disruption or not. So in simple terms, what I would like to know is what are the main sources of errors or inaccuracy or tampering in this financial system, and can a technology based on blockchain help to mitigate them? So what are the main sources of errors, inaccuracies, and possibility of tampering with the data in the system?
We also ask this question to the participants because the research also covers the fraud prevention and detection mechanism of the blockchain technology itself. What we realize is that the findings shows that the technology can help in detecting errors. It cannot prevent fraudulent transactions. And I'll give you an example. Financial transaction is beyond going through the codes. The codes can be fine. It can work perfectly. But what of you and I that are behind the codes, the human elements? It is possible for us. I'm here in New Zealand, you are there, maybe in Australia, and I want to write a receipt, and we collude. Okay, write this receipt to be $500 instead of $400. The technology will not detect that. There could also be what they call third-party transaction, whereby, no, related party transaction, forgive me, related party transaction. If, let's say, you want to buy a property from me, and you can pay, and you don't have access to the property. We just share the money. The technology is not going to be able to authenticate that, whether the business actually collects the property or not. So the inaccuracy, the technology as it stands, does not have anything inaccuracy in it. It is the human element that want to feed inaccuracy into it. And we further go ahead to test, can the technology solve the problem of garbage in, garbage out conundrum? And majority of the participants believe that no, whatever you feed into the system is what is going to come out. So doing my own self-reflection, I think, including myself, I may be wrong. We are looking at the technology from the point of view of what the setup of the Bitcoin blockchain and other cryptocurrencies. But in the finance world, everybody knows that if you are running a blockchain, Bitcoin, or any cryptocurrencies, we all know what you have. Is either I have 100 Bitcoins, you have 1,000 Bitcoins. You can't spend more than that. When in the finance world or in the transaction world, it's a real time. People enter transactions. The technology will not be able to come up with, who comes up with a wrong debit or wrong credit. So if I'm answering your question correctly, I don't think anything is wrong with the blockchain as it stands and the configurations. Anything could be wrong with it from technical point of view, but the major challenge would be the human that want to use this technology. Thank you.
Ron, why don't you ask your question next?
Yeah, I've got a couple of questions, but let me sort of start with one that relates specifically to organizations like cryptocurrency exchanges. I mean, so FTX, for example, there's been a lot of discussion post the FTX collapse about proof of reserve techniques. Now, there's actually some cryptographic techniques where if the assets that you're dealing with are just cryptocurrency, then the blockchain itself can be used in order to provide evidence that an organization like an exchange is actually holding reserves corresponding to customer accounts. So did that sort of issue sort of come up in your discussions, either from you, sort of giving that as an example to the participants to say, what do you think of this particular idea? Or was it something that any of the participants volunteered as an example where blockchain could have a benefit?
I think if I can remember vividly, somebody mentioned of that in the passing, but as I said, as I said earlier, beyond the usage for the cryptocurrency, there is no full financial reporting and accounting purposes whereby we can use blockchain technology. And a lot of participants, especially people from the financial analyst and expert group, they made mention of whereby if you use code, you can scan the code, as I said earlier. If everything is on the blockchain system itself, it is easier for the technology to trace that because it's a code, as you said. If the house is registered and it has its own code, it is easier to confirm whether this property are actually transferred to the business or not. And if that has not happened, it will still be difficult for us to claim that blockchain will be used for full accounting purposes and reporting.
Mm-hmm. And then my second question is sort of in relation to, so it's more sort of in relation to sort of accruals and sort of contracts that an organization may have signed. I'm not myself familiar enough with exactly the attitude that auditors take to those. But a sort of natural language contract, which would typically be signed by an organization, will then sort of place a lot of obligations on the organization. And to what extent are those reflected in the books? And there's an inherent issue there with respect to representation of those contracts in a blockchain setting, because the contracts are written in natural language rather than in code. And there's difficulties in sort of translating that natural language into code. And there's inherent problems there based on the vagueness of natural language. So is that sort of an issue that you thought about, or an issue that came up in your discussion?
Yes, it came. I remember because one of the academies is also a lawyer. She spoke extensively about that. But what I learned also from there is that it is still evolving. As you said, contracts are written in natural language, and blockchain is going to be talking about the codes, the software, and what have you. That with time, when the technology evolves, we'll be able to shift the ground to accommodate this. Countries will be able to pass law that will enable us that whatever codes written, maybe using AI or what have you, will be accepted. But as it stands now, it is difficult in a law setting to interpret such contracts or enforce such contracts. And I saw somebody in the chat say code is law. That is that is what the pro blockchain technologies believe, that code is law. Yeah.
Okay, thanks.
Just to make sure there's a question mark, right?
Yeah.
But why don't we let David ask his question? And I don't know if this is going to be related to the one that he put in the chat. But anyway, David, go ahead.
Hi, it's more of a comment. I'm an accountant and an auditor, so and I've been following this topic for 4 or 5 years. So 4 or 5 years ago, I thought there'd be more disruption than what we've had, but certainly in the back of my mind. So it's my son's bird. I hear comments about other people saying no need for auditors, and it's hard enough to get accountants and auditors at the moment, let alone them being told they won't have a job in a few years. But I think that they will. So one of the things about understanding accounting, and most people are used to trial balances and general ledgers and things, and financial statements like profit and loss and balance sheet. But apart from a very small organization that uses sort of cash, with large businesses, it's not just taking that general ledger and translating it into financial statements, because you've got a lot of estimates. So there was mention of accrual, but there's estimates about, how much revenue you recognize on a contract if it's based on performance bonuses and the like. Then there's something we call impairment to make sure the assets aren't overvalued, like the banks. Will they get all their loans back? Well, there's an estimation process in there, and they've got very sophisticated internal systems that do that. But essentially, you can't replicate that outside unless you've got the internal systems. And then there's, garbage in, garbage out. So, I think it's disruptive. I also have, on a technical basis, the blockchains aren't all equal. They've all got different consensus mechanisms. So if you hear about blockchains and sort of immediately put Bitcoin and proof of work in your head, well, basically, you can't hack, Bitcoin without massive computers. But others have, they've got they can have a central point of authority, proof of authority and variations of that. So to use an example, the ASX system that's now no longer going ahead, but if it had, there was one body that essentially was going to be determining which was the true transactions, and that was the ASX. So there's some issues with that. And yeah, lots of estimates, interoperability. So the shipping one I thought would go further. Is it Maersk? Is that how you pronounce it?
Yeah, Maersk.
That's no longer progressing, but very similar. I sort of didn't really see anything coming from that other than it was like a electronic data interchange advanced version of that, with transactions, and people were, not too sure the company you mentioned actually used the Maersk one, but let's say it was that or something similar, and they just use it as an input into their own system. So, and then interoperability and all the different blockchains out there, and how we're going to deal with that. But yeah, certainly it'll be a source of transactions to audit, but I don't think they'll take over the auditor. And as we move from financial information to non-financial information like sustainability reporting and climate reporting and all the greenwashing and the the different levels of reporting, it's just gone blank on me, but you've got sort of like tier 1, tier 2, tier 3, and it's like, you know, once you start getting into the tier 3 and you start having to include supply chain emissions, it's a whole different ball game. And then proof of reserves was something else, but that's another sort of hobby horse I had to go at. But yeah, that didn't work, hasn't really worked either, because you can share your private keys. So, you know, if you get the fraud involved, you can share the private keys, and I can say, I've got access to those keys. And then if I give you my private keys, you can go to the bank and say, I've got access to this cryptocurrency, and then go and get a loan as well. But
I think, surely though, systems where you start sharing private keys like they did at FTX, or where they are reported to have shared private keys at FTX amongst many individuals, surely there are so many things wrong by that point that, I mean, there's more than just a few dollars going astray. Look, Musbadeen, that was a great talk, and the fact that you've got lots of questions shows that you've really hit a chord with the audience, which is great. So thank you very much.
Thank you.
Yeah. And so, I guess, I don't know, are there any final questions before we sign off? No, but there's lots of e-clapping. So electronic clapping is pretty good. All right, look, thank you very much again for your talk. Have a great day, and enjoy the next few weeks of traveling around that you talked about earlier, and see everyone next week. Bye-bye.
Bye. Thank you so much.
Thanks very much. Bye.
Bye.
Bye-bye, guys. Thank you.